Hello traders, today is Monday 8th of July and you're watching Libertex Show Pro Market Review. My name is Andrew Burke and for the next 15 to 20 minutes we will check temperature on our markets. Of course we will check the best opportunities with key major levels, and of course we will try to avoid pitfalls on our market. So let's start from US dollar index. As previous week we had job report better than expected, and the reaction of traders of course is optimistic. As you can see, this nice white green candle, and today we have small what it is, like small inside red candle, but the color doesn't matter because it's still inside the previous range. It means the traders just digesting, okay, this action, nothing special. And of course we know that Mondays usually very slow, volatility is very low, so let's wait a bit when traders will step again into the market and we will see some movements. I will put this high as my key resistance level. Again, we are above key moving averages 8 and 21, which is 96.50 cents is my key support level, okay, and we will see if traders will manage to build some kind of flag, bull flag here, and maybe tomorrow we will continue higher. Here we have this major key resistance level 97.20, okay. If buyers will manage to break out this key resistance level, we can see some more upside movement, and it's very close actually to these highs, okay, which is 98.0. So, but again, it's a midterm, and we are talking now about short-term price action. For today, just very calm action, and let's just wait how the situation will develop, okay. Just put your key levels of resistance and key levels of support, and keep in mind major scenarios. I am biased to the upside, but we will see, of course. Lower rates will keep pressure to the downside on US dollar. That's why I'm not sure about buying at this moment, okay, especially in front of this resistance level 97.20 and 19.7 as well. So let's check what Euro USD is doing. Of course we expect it to go lower as US dollar was stronger, okay, and combine it with Euro and we will see downside chart. That's what we expect to see, but let's actually check what we have. Really, we have this white red candle, okay. The price was below key moving averages, so it was kind of broken, okay. Buyers failed to hold this upper support around 1.13400, and we dropped below key moving averages, which is 8 and 21, 3 inside candles, and again continuation to the downside. Okay, so we are very close to this important support level, which is 1.12. Okay, so let's see if buyers will try to support prices here, okay, as we have new ECB head, Christine Lagarde. Probably she will continue Mario Draghi's policy, which is very ultra low, okay, quantitative easing. She will continue to stimulate Eurozone economy with cheap money, but still she has no ammunition because rates are already near zero. Even negative. So probably she will try to maybe stimulate some fiscal policy methods, as she was previously Minister of Finance in France, and she has very nice experience in fiscal methods. Okay, again, it's not her competence as a head of ECB, but maybe she will cooperate with other European institutions and they will figure it out. Okay, so for us, as for traders, we have this key support 1.12. We have very slow action today because we're still digesting this white range bar. Okay, and if you want to be a buyer here, maybe you can buy today with a stop 1.12 below the low of this candle, or maybe just wait because the action is still very bearish, or maybe even random, because we have some upside moments, downside moments, and seems like investors are very uncertain about future direction of euro because many factors, and they cannot evaluate properly what will be the price. But again, let's just wait to have some clear picture, because at this moment we don't know what will happen next. Let's check GBP USD. Again, all charts are on daily time frame. Okay, so our forecast can be meaningful for maybe a couple of days. So here in GBP USD, we are very close to this major support, which is 1.25. Okay, and recently the price came from 1.27 to 1.25 without any pullback, without any consolidation. Maybe we are a bit oversold here, and some traders expect to see some bounce. Okay, I don't want to push things. Okay, so I bought a little bit, just a little bit, with the risk 1.25, and I will add respectively when price will break out from this 3 days resistance level 1.26. Okay, just a little bit to have a nice price, very low risk, very tight stop. Okay, yes, the price is still broken, but I expect to see some maybe bounce, kind of bounce, as we are near this support, and we know that near support traders expect more buying than selling, and still we are very oversold. So probably I will add if the price will confirm my number one scenario. Okay, so what about gold? Let's see what gold is doing. Okay, here it is. As you may remember, the gold breakout this major resistance $1,360. Here it is. Since what it was, like 2018, beginning of 2018, yeah, February, and we broke 1 year resistance here with a nice upside movement, acceleration to the highs. Then we have this top in tails, okay, around 1.440, and again we retested one more time. Then we had this reversal candle, red reversal candle, again lost 8 moving average, and now traders just digesting this movement Of course, the action is very volatile, so it's better to wait for now, okay, for more consolidation, so you can control better your risk, you know your stop. As for me, I see that this level 1.380 seems like a good reference point for some buyers, but I will wait as we had this huge movement to the upside, and I think we still need some more time just to digest this huge movement. Okay, so gold is a defending asset, and when something is going on in the world, some turmoil or maybe data, macroeconomic data is worse than expected, or maybe slowing down of economy, then traders switch to gold. That's why we see this aggressive movement as we have, as US and China locked up in this trade wars, okay, and other stuff is going on markets globally. So that's why they are interested in gold, probably till the end of the year. This is my long-term forecast. We will see the price above, I think even 2000 is possible. Okay, it's very optimistic. It's very optimistic, of course, but actually it's very low probability, because with such volatile, with such amount of volatility, we can't expect really 2000, but at least about 1.5 thousand we can see our price. Okay, so let's put this one on the radar. I use my 21 moving average as dynamic stop. As you can see, it acts very nicely. It acted very nicely here in the beginning of 2019. Okay, when we lost 21 moving average, again we entered into this consolidation period, and again we see this buying momentum here. So don't try to speculate to the downside, because it's still very strong. It's about 8.21, and what it means that we are in this bullish momentum. The order flow is to the upside. The sentiment is positive about gold, so don't try to pick up this losing side, which is selling. Okay, but I prefer to trade high probability trades, not low probability trades. Be on the winner's side. Okay, so let's check what crude is doing. Okay, I will type Brent just to choose Brent crude oil, and actually I don't see nothing here. You know, I have a rule: if I, for example, for 5 or 10 seconds can generate any idea about the chart, cannot clearly see the trend or direction or lack of direction, I want to avoid. It's better to avoid, of course. So you see that it's very difficult to trade crude, as it's trading around key moving averages. It was below, then again above, and now it was below, and now again it's above moving average. It's regained 8.21. So what it means that we are in range bound market, and in range bound market I want to trade near resistance level, which is 66.20, or near support level, which is $60, and or even it's better to avoid. But in the middle, where we are now, okay, the chances are 50-50, and again I don't want those marginal trades. Seems like lack of direction, and it means that I don't have any edge here. So again, it's better to just avoid this random trading asset. But maybe later we will have some nice clean setup, but for now we have to wait. Nothing special here. So what about US markets? We were near all-time highs previous week, and we are still there. Okay, again, look how sellers tried to push prices lower, but failed again, and bulls stepped into the game, reversed the price, okay, and closed green. Not far from highs, okay, not from highs. What it means? It means that bulls are still in the game. They still control the price. Just look how nicely this 8 moving average follows those lows. Okay, so 296 is short-term support level. Here it is, because traders tested this one and defended. Then we have this 294.25 cents, the second support level. Again, those levels are for active traders. If you are investor or if you are mid-term trader, then you have nothing to worry about, because you have this 200 moving average, which is far from our price. You have some major key support levels, again far from those highs. You see this. You can actually rely on this if you're investor. Okay, you can rely on this major support 272. This one I will delete. And you see, when active trends are lost, we have this movement to the downside, and again we have this active trend. So we try to analyze our trends to see when they change in direction, or just to exploit those upper movements. Again, we can continue even higher. The resistance is around 299. Actually, we are very close to this 300 level, which is a psychological resistance, I suppose. Okay, because traders very anchored to some round numbers, and probably this one will be strong one. And if the buyers will manage to break out this 300 level, we will see some more upside movement, as maybe sellers will cover their losing positions, and traders who sitting on the sidelines will again step into the game, will add fuel to this market, and we will see some exponential move and maybe volume exhaustion, so called. Okay, but if it will happen, I will show you what it means and how to trade this setup. Okay, so basically that's it. We went through key major assets like currencies, commodities, and of course S&P 500. Okay, today is Monday, big start of the week. Start very slow, don't be in a hurry, don't try to look for revenge for previous week if you have negative results. Okay, or don't be too cocky or overconfident, because again, as for traders, it's not very good to be overconfident, because you can take more risk and occasionally be wrong. Okay, so it's normal to be wrong for some time, but you have to control your risk. So don't forget about controlling your risk, follow your rules, know your time frames, and you will be okay. So thanks for watching, guys. Andrew Berg. See you next time. And of course, if you have any questions, please feel free to ask them in the comment section, and of course I will try to answer them. Okay guys, thanks for watching again. Bye bye.